Hi everyone. Today let's talk about the biggest tech titans, and the bigger they are, the harder they fall. Then we'll talk about the potential for a triple divergence here on the weekly charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the bigger they are, the harder they fall. Tech titans, let's take a look at the largest companies. We've seen companies like Intel, Starbucks, Estee Lauder face significant down moves, proving that dominance is never permanent. Interesting take there. It seems hard to envision that with today's tech titans, but definitely we've seen it across the board outside of technology where these companies just continue to suffer over extended periods of time, like Intel, Starbucks, really struggling 20 to 60% down on the year as some of these brightest stars continue to fade. But why do they end up pulling back? Think companies like IBM, even in the software and technology companies, giving way to major players like Microsoft and Apple. And I think we're actually seeing that a little bit with Apple. They're just kind of resting on their laurels. Nothing has come out new really from them. They tried to do that VR product, which seemed reasonably successful. A lot of people did like it, but it's just wildly expensive. And I really liked this chart here. So pretty interesting take. You can see from up to 100 years as they trend close to that peak level here in terms of total US market cap. The current 2024 top 10 companies account for around 30%, and that's just about as high as it gets. And usually once you get into that area, they do start to downtrend over time where you start to see other market leaders come into the fold. So we've seen that meteoric rise from companies like NVDA getting into that $3 trillion club. That is a cyclical stock, and it's probably going to come down at some point in the future. It could be many years from now, who knows? But eventually it will come down, and you can see based on history, once you get into this 25 to 30, 35% range, that's about as high as it goes in terms of the total US market cap. But can today's tech titans maintain their leads? And they do talk about what I just mentioned. Apple, having made fortunes on the iPhone sales, seems to be that they have plateaued a little bit. They're trying to explore other things like streaming and payments. Google facing pressure from companies like TikTok, trying to reshape towards a younger audience. And even Microsoft and their web services facing threats from Amazon and Google. Really, those are the biggest companies already kind of just fighting with each other. But what happens if we see another major cloud player jump into this oligarchy between these three major companies? And then you have to always consider antitrust regulators starting to crush some of them. Companies like Google and Apple have already been faced with criticisms, especially around their app stores. And then, of course, we have to factor in the speed of technology change. It does tend to speed up. We've seen companies like MySpace go away and get crushed by Facebook. But what will the next disruptor be? And then it's always important to understand that if you hold these major companies, they take up a huge percentage of these key indices. Just like we've seen here, US total stock market share. We're at very, very high levels. And then also looking at the US champion share of the MSCI World, it's higher than it's ever been. We've never seen it higher. So concentration is important, and it does need to be mitigated because we are very concentrated right now across major markets. In terms of key takeaways, it is important to participate in these major blue chip established companies. They've done well, and they are usually safer bets, especially against market volatility. But make sure you to add some of this potential growers, emerging innovators, dollar cost averaging always important, and then periodically rebalance to try to reduce some of those overweight holdings. Moving over to fear and greed, we did finish the week at a 68, down from a 71, up from 63 a week ago. So a little bit of choppiness, grinding price action here. We peaked on that Thursday, fell a little bit into the Friday session, and you can see that here on momentum. A little bit of a dip right at the end. This was an extreme greed for a lot of the week, and now we're in regular greed. Breadth and strength are still in extreme greed, as well as put-call ratio. So we're definitely seeing some extension. Market volatility starting to peak up here like we saw on Friday. And then safe haven demand, we're seeing stocks underperform while bonds outperform, so that's a little bit of a fear metric. And then junk bonds still sitting in regular fear. Moving over to the AAII survey, it's basically the same, really didn't change very much. The price action was grinding slowly higher, so all of the metrics stayed generally the same. Saw bears fall a little bit, saw neutral widen a little bit. Could be a little bit of a topping pattern, especially after what we saw on the 9/11 week, with the bears expanding and the bulls contracting. Got a little bit of a grind retracement. Now we're starting to see that happen again. Doesn't mean a whole lot. Bulls are still very, very high, which to me still puts the risk to the downside. Looking at seasonality here for October, you can see election years are pretty terrible months. down a lot here in the first couple of weeks, 2.5% on average. And then for the 3-week period, you can see 3.5% there for the Russell, followed closely by the NASDAQ at around 3%. So a pretty bearish period for October during election years. Non-election years, pretty good, about 1.5% to the upside, but we are in an election year and we'll see if this comes to fruition. Pretty bearish period, even more bearish really than September was. And then looking at the calendar here, we're looking for bullish signals because it is starting to get into that Santa Claus rally time period. But remember, election years are definitely weird. There are some bullish days here. First day of the month is relatively bullish on average. The last day of September is relatively bearish. So a little bit of mixed signals here on that first week. But you can see here, worst 6 months, worst 4 months, ends the worst period. And then hopefully we start to get that rally into November, December. So we'll see how it plays out. Looking for some bearishness for October this year. Moving over to the economic calendar, for Monday we do have Chicago PMI as well as Fed Powell speaking at 1300. I didn't really hear much out of his last speech, probably not going to be too much out of this one, but could be something to watch there. And then for Tuesday you do have Eurozone CPI, some economic data here, ISM manufacturing PMI, manufacturing prices, US manufacturing PMI, but we do start to get jobs data, so this is a jobs week, JOLTS report, as well as the ADP non-farms here for Wednesday. Eurozone unemployment rate, which is quite a bit higher than ours. And then for Thursday, the usual continuing jobless claims, initial jobless claims, a little bit more economic data, composite PMI, services PMI, non-manufacturing PMI, non-manufacturing prices, Fed balance sheet, which has been selling off a little bit faster here recently. And then for Friday, we do get all of that unemployment data, non-farm payrolls, participation rate, unemployment rate, 4.2%. Going to be critical to continue to watch that. If that comes in any higher than expectations, it's going to be brutal. So something to watch. Jobs data has been a powerful indicator here recently. Moving over to the charts, starting off with the S&Ps here on the weekly, you can see we're back above this trend line here. Last time we got above it, we did have 4 weeks in a row of bearishness. So something to consider. We are back in this kind of zone. You can also see RSI, the peaks continue to be lower. So we're getting triple divergence here. We are right at that RSI. So if it's going to break down, it's going to do it here. So again, seems like a little bit of a top. Something to consider. We've had 3 weeks in a row of bullishness. Would not shock me to see a little bit of a downturn here. And to give a little bit of a price target in terms of levels, that next trend line's down about 2.5%, 2.25%. So somewhere in there makes sense to me. 5,600, right in line with that trend line. That would also bring you back to these EMAs and SMAs, which are currently at 55, 54. That'll step up here a little bit next week to around 55.85 in my opinion. So see how it plays. Momentum right now bullish. RSI looking like a point of resistance. And then looking at that daily chart here, you can see the gap up. Tried to go higher, failed, a little bit of selling. Got the trend line here, looking for a retest of that 9 EMA at least on the daily, which is sitting at 57.02. So definitely some levels to work with. And then looking at that SPY level, I really haven't added anything on this grinding yet. I definitely will this week, but looking at 565.16, still a critical zone here. If that 9 EMA breaks, which is at 568.72, then I'd be looking for a test of that level. Again, short term, that gives you about 0.5% to about a 1.25% down move potential over the short term. And then looking at the Tasty charts, you can see we hit that second ATR band. That was at 575.21. High of the week was 574.71. So missed it by about 50 cents. Nothing crazy. We've been grinding along that as your upper resistance. That was the peak on this previous top as well. Touched that again. Momentum a little bit bearish. Seems like this is going to start to roll. 9 EMA sitting there at 558.91. Again, you could absolutely see that kind of a move in a week. And then looking at it on the daily chart, you are still in bullish conditions here, but it's been a little bit choppy, right? So you had a couple of days bullishness here, a couple of days bearishness here. Now we've had a couple of days of bullish again. Seems like this is going to roll back down into that zone. Your trailing stop right now is at 554.80. Moving over to the NASDAQ, we managed to squeeze out a little bit of a gain here, 1.1%. Momentum continues to swing to the bull side, but again, we are right there at the SMA. So this is the zone where you're going to start to see rejection. We've seen it before. You get right here, look for that move. Sometimes you overthrow and then see what happens after that. But this is the zone. Interesting to see it. Momentum continues to look bullish. Trend resistance right now is still sitting up around around 20,692. So you do have a little bit of room there. If the NASDAQ gets a continuation, there's still about 3% up move to that next trend line. You can see this grinding price action here, mark that top here. That would give you a little bit more room to the upside. We'll see how it plays. The SPY and the NASDAQ are actually a little bit out of sync right now. The SPY is at all-time highs. The NASDAQ is setting up a lower high relative to this high, but slightly higher than this kind of midpoint here that we had off this double bottom. So a little bit of a different structure. Interesting to see them out of sync. And then looking at that daily chart here, you can see same kind of price action on the Thursday into the Friday. Gap up, fell, more falling here on the Friday. Trend support down at that 19,850. And then looking at that on the Qs here, you can see we're right there at the level 486.84. After hours, we're a little bit below it. So that would give you a move down to the 9 EMA, down around 482.35. And then my level there, 481.94. So momentum stepping down, RSI looking to retest the SMA. Again, mixed signals. The daily chart is trending higher while the weekly chart is showing a little bit of weakness. So definitely interesting to see those mixed signals. Again, short-term bearish for me. I think we're going to see at least another 1% down move into this consolidation low back from 20 and 21 September. Moving over to the Tasty charts here, you can see that up move. We did get stuck on that first ATR band, which is at that 488.04 level. We overthrew it slightly on the previous top, but we are stuck there once again. Momentum still bearish, so very much still an uptrend on the medium time frames. You can see those ATR bands continuing to trend up and to the right. We're still in bullish conditions on the weekly. If we did get the continuation push, that next ATR band would be up at 506.71. But again, if the SPY starts to roll to the downside, it's probably going to take the NASDAQ with it, despite the NASDAQ actually looking a little bit better here in the short term for me. And then looking at that daily chart here, you can see we got back into bullish conditions on September 19th. We've been grinding slowly, almost hit that upper ATR band. That was at 496.32. Pulled back from there, 8 EMA sitting there at 483.33. So that would be your first level of support. And then we'll see if it breaks back down to this 21 EMA like it did on the previous consolidation top. So that would give you about 0.75% to that next level here. And then the 21 EMA was the previous bottom here. And right now that's in the 471.83 level. So that's about $15 lower. That would be a substantial move if we did get some follow through on it. And then your next level of support would be the ATR trailing stops down at 466.72 in here. So we'll see if that ends up being support. Last time we did get all the way down to the 144 EMA. And right now that is sitting at 456.30. Again, that is a full $30 lower on this price action, almost 10% lower. So something to consider. Definitely the risk is to the downside in my opinion for the NASDAQ. Moving over to the Russell, you can see we did get a down week, 0.56. Still cannot get above this trend line here. We tested it last week, tested it this week, still rejected off of it. Held support at 218.13, still sitting at 220, just below my level, 221.49. So really no change to the thesis. If we can get a breakout, looking for 226. As long as we hold this support in here, 218.13, and then your support at the trend line is that 216 area, and then just below that, you got 214.79, some critical zones in there. You also got 9 and VWAP sitting on top of that level, so critical zone here as long as that holds up. Momentum bullish, RSI sitting right on top of the SMA, slowly trending higher, so everything still looks good here. And different from the other major indices, we ended up getting 2 bullish days to finish out the week, which was pretty good. Tested that trend line here. You could argue this is a higher low maybe if we can get up and push above this previous high. Otherwise, if we reject off that previous high here around 224.71, then that would be a bit of a double top, and then we might see some lower lows to come. So something to consider there. The daily chart is a little bit harder to read. And then looking at the Tasty charts, 8 EMA sitting there, 216.53. So that continues to be a zone of support, momentum bullish, little bit of volume last week. Pullback this week, still would expect that to hold. Want to see that 8 EMA hold. The last couple times we've kind of been chopping on top of it. So if this holds here, that would be quite a bit more bullish than we've seen really going all the way back to December. You can see we're grinding along it here up until March. And then it's been a bit more choppy since then. So you'd like to see it hold, still bullish conditions. And then looking at that daily chart, interesting to see the Tasty charts giving this bearish days every single day, but still holding that 8 EMA, 219.24 right there. Still bullish conditions after the break here on the 19th. upper ATR bands are sitting at 224.20, and then that next upper level, if we can get there, would be 228.22. So I think there's a little bit more swing to the upside. Right now it's holding that 8 EMA on the daily, which is a good indicator. Want to see this get some more swing to the upside. And then moving over to the Dow here quickly, you can see momentum still bullish, RSI still bullish. I added quite a few levels here, one at the top and the bottom of this most recent candle. So your all-time high is 426.20. We're still stuck between these two trend lines here. I also added a level at the bottom of that candle for 1838, and then I did go ahead and put an intermediate level at the top of this 29 July candle. That's at 412. So we got some levels to work with. If we can get above this trend line here and above that 226.20 level, then you'd be looking for a push to this next trend up here around 434.68. Be interesting to see if we can get that kind of a continuation. If we did get there, that would be super extended, and I would expect a pretty powerful rejection off of there. Something like this where you see big upswing, big down candle to follow, big continuation lower. So we'll see how it plays. Right now, everything is still bullish, and we are at all-time highs, even though the RSI continues to chop, showing either flat highs or lower highs. So definitely some divergence from these previous highs with much lower prices back here in mid-February. Moving over to the equal-weighted S&Ps, you can see 3 weeks in a row of bullishness, new all-time high. That's going to be 179.94. I added a level here, 177.25 as well. So this is your trading range. If we can get up to that next trend line here, that's currently sitting around 181.96. Let's go ahead and extend that out just a little bit. So we're still in this trading range, nothing crazy. Everything continues to look bullish up to that next level, and then we'll see what happens there. Momentum bullish, RSI bullish, and it's really good to see this broadening of this overall uptrend. Still looks quite good in this well-defined uptrend. Moving over to the ratios, looking at the SPY Russell and the NASDAQ SPY, you can see both of these were bullish on the week. So the SPY outperformed the Russell and the NASDAQ outperformed the SPY just a little bit. We've been watching this momentum swing here on the NASDAQ, which continues to do a little better than the Russell and the SPY. But look at that RSI. We're getting very close to that SMA. Is it going to reject from here? And we're going to see some NASDAQ underperformance? Certainly possible. But right now, SPY doing okay, NASDAQ doing okay. We're definitely at some key points of resistance. Testing the trend line, could reject from there for the NASDAQ. And then the SPY outperforming to this 2.59 level. This is still very extended to the upside. Just don't forget, this is a very high level. And we have not been very close to this most recent peak around 275 for a long time. Back since the beginning of July, we've pulled back. Lower high setup consolidation. I still think this is going to pull back, which is part of why I've been so bullish on the Russell over the last couple of weeks. I still really like it. I think this was just a bit of a consolidation period here, and I think this is going to eventually break to the downside once this 55 EMA consolidates a little bit more up into this 259 area, but right now it's down at 252, and it could take a few more weeks to get there. Moving over to the SPY divided by the M2 money supply, this continues to push here, and look what we touched. 27.25 was my level. The high of week was 27.24. I think you can go ahead and call that a touch. 1/100th of a point right at the level. Pulled back from there. RSI right at the SMA, just like we were seeing. Consistent lower high setups on the RSI despite the S&Ps actually going higher in terms of price action. So critical zone here, if it rejects, could be a crucial one. And just as a reminder, remember this is very much an extended period. The only time we've ever been above this for any length of time was the dot-com bubble, and eventually it does come back into normal conditions. And for me, that's 2205. You can see that being critical points here. February of 2000, October, November of 21, July of 23. And honestly, you could argue that maybe the actual peak is this 2122 level. Going back to June and July of 2007, that could be an interesting zone. I just say 2205 because that's been the three peaks here most recently before we saw major pullbacks. And we're definitely extended, and you can see it seems like we're finding a bit of a topping pattern here. Definitely not the same acceleration upwards that we'd been seeing since October of 23 up until March of 24. Moving over to the Mag 7, the Mag 7 continues to show bullishness. We're still looking for this trend touch. The next level there is going to be 291.42. And I went ahead and added a level here going back to this 15 July high, which is right there at 283.46. And you can see we did just barely touch that level. High of this week was 284.38. So we touched that level, found a little bit of resistance, doji there. Looking to see if we can get up to this next level. Like I mentioned, momentum says we can. RSI got back above the SMA, so that's good. But it is is still trending lower, so that's a little bit concerning. So either way, this looks like a bit of a double bottom. If you can get the candle break here above these previous highs, there is some room to the upside. If we start to extend out these trend lines, maybe you see a touch up here around the 315, 316 area. That would be a very powerful move, and it's certainly not impossible. So just something to consider. If it double tops, obviously that's bearish. If it breaks through this previous high, very powerful move could follow. Moving over to stocks I got asked about, we got SoFi here. I got asked about it. And it does look pretty good here in the short term. You got a bit of an uptrend coming up. I always forget how young of a company this is. They just went public back here in November of 2020, and you just now hit that 200 SMA on the weekly chart, which is right there at 1022. So maybe we see a push up to that level. That could be a bit of a price target. In terms of EMAs, you are above all of them. You're in this kind of consolidation here, looking for a push to this trend line up here around 909, which would give you about $1 of a potential up move. And then looking at it on the daily chart, it looks a little bit cleaner. Like I mentioned, clear tops, clear bottoms. Held this level here, 21 VWAP, momentum starting to swing, RSI starting to swing. And if you do get a push to that trend line, that's a pretty decent move. That's about 14% or so up to that next trend resistance. So definitely some potential there on SoFi. Moving over to Apple and Microsoft. Apple basically flat on the week, 0.18, momentum bearish, RSI still bearish, still below this trend line here. Still looking for this to push back down to that 21 EMA around 214.28. Still stuck between this range here though, 224.36 and 230.28. Didn't test the upper range, did test the lower range. Might see this break here. 217.62 would be your next to the downside. I still think this is going to sell. We had the huge volume 2 weeks ago. We talked about how that was on the big selling candle, and it does seem like we're going to see more selling here. And then pretty hot take here on Microsoft. I threw this structure on there from this high, lower high setup here. And then if you draw the midpoint, kind of fits here, and then if you extend that out to a bottom trend here, that would give you a really powerful potential for a downside move. If you got a move to that lowest trend line here, that would be about 14.25%, right to my level there at 367.07. That would be a powerful move. So something to watch for Microsoft, potential for a 14% down move if this follows through on kind of forming this structure here. It's still kind of young. You do have that one bottom here, a lower high here, but if this ends up falling through on this structure, that is a ton of downside potential. And the RSI supports that. You can see we're right at the SMA, rejecting off that higher trend line, selling off here. Didn't see a ton of volume, but something to watch. Maybe Microsoft has another move kind of like this from top to bottom. That was a 17% move or so it can absolutely do it. We've seen it before. And if we get a continuation to a lower low here, certainly a possibility of 14% more to the downside. Moving over to Tesla and NVIDIA. Tesla continues to do what we thought it was going to do. Broke the level here, 255.44, which was the initial price target. Now it seems like we're headed to these kind of wick highs back from 15 July, which is 264.68, waiting to see if that level touches. And then if that breaks, 280 is your next one. So momentum very strong. RSI has some room before we're in overbought conditions. We saw this big move here, pulled back more than I thought that it would, but then we did get the continuation like I thought it would. So continues to play, continues to look bullish to me. And then looking at NVIDIA tried this week. Pretty strong move, 4.66%, tested the level 124.68. That was the price target if it did break this consolidation that we saw from 2 weeks ago. And then this week, sure enough, hit the price target. We're back above the trend line. If we get the continuation, 230.35, if we can get back above 124.69, and then the trend line above that is up at 136. So potentially looking for 2.5% to the next level, 7% if we can break there. And then if we get that next move up here, that would be about a 12% move. So those are your three kind of upswing levels, waiting to see if this has more follow through or not. I suspect that it will, especially with the catalyst of the CEO selling being done, but something to watch for on NVIDIA. Still finished around the midpoint of the candle. We've had a series of lower highs here, 1, 2, 3. If this does form a lower high off that 124 level, this could push right back down to the 106.6 area. Moving over to Amazon and Alphabet here. Amazon was down 1.69%. And then looking at Alphabet, positive 0.39, gap up, doji. Momentum still swinging, RSI still right there, looking at a retest of the SMA possibility, but I think this might be an island reversal here on Alphabet. Gap up, gap down could be interesting if it gets below the trend line, 164. Then we're looking at 160, 158 again. And then I added a trend line here on Amazon. Really, this needs to be right about there, I think. So right at this previous high here, and then right to the high from the 16 September week. And now we're back below that trend line here, looking for a push back down to 181.41 as we broke 188.61. So looking for a move down to here. Then if that level breaks, then we have a pretty significant downside potential there on Amazon. This looks kind of similar to Microsoft, honestly. Consolidation, tried to break out, failed deeply, pulled back to consolidation. Now we're getting a lower high setup, and I think it's going to break down some more. So we'll see how it plays. It's certainly a possibility that this has a similar move to Microsoft. And then Google, again, still very much a short-term downtrend, a medium-term downtrend, waiting to see if this is a true island reversal. Moving over to staples and discretionary. Staples basically flat. Found some support in here around that 82.53 level, pulled back to 83.43, stuck in that range now, same place as we were the previous week. And then looking at discretionaries, look at that move. 3 very powerful candles in a row, pushed right to the trend line like we thought that it might. And then now I think we're going to reject off there, maybe establish a higher low. This is a higher high at this point, so you would expect the higher low. But those pullbacks can be pretty dramatic, at least retest the previous high around the 192 area. So in the short term, looking for a move of about 4% lower, maybe even down here 5.5 to 6% lower. Then we'll see what happens from here, establish that higher low, and then maybe see some more upswing. Right now, momentum and RSI are still bullish, so maybe it breaks out and continues on, certainly possible. We're not quite at your all-time highs yet. And you can see that here, all-time highs go back to this 22 November of 21 candle, and adding a level at that all-time high, 215.06 is the level. Previous consolidation in here, and we'll be inside that consolidation if we get above that 203.98 level, which is just behind the trend here. So we'll see if it can go. Seems like it could, and we're not quite into overbought conditions yet either. So again, could have some more movement on it. Moving over to oil and gas and transports. Oil and gas had a pretty terrible week, 2.72%. We took profits the previous week. We thought we might get another dip low, and look at that volume. Big volume on the week, 21.2 million shares, more than the 16.2 the previous week, and much more than the average, which is closer to 11 million, so almost double that. I still think this is a solid base in here. In fact, let's look at this on the daily just for a moment. You can see that volume came in on that low candle here at 128, and then the next day was a pretty decent pop there of around 2.5%. So I think oil and gas could have found a higher low off this previous low here, and this could have a little bit more swing to it. So something to watch for. Does kind of fit that left shoulder, head, right shoulder type formation. If this has some more room in it, something to watch. I do have an alert there for 131.82 at the 21 EMA. So something to watch for. We're back above the SMA. I do like oil and gas. I've been liking it for a while. I figured we'd get the pullback, and I think that's just about done here now. So we'll see how that plays. And then looking at transports, powerful week here. 0.7, almost engulfed the previous wick, got right to the level 69.29. Above that is this high back here from March and April. That high is 71.13, and that is your all-time high because that takes you above these 2021 levels. So something to watch for, a push back to all-time highs on transports. And really this has been the laggard. The Dow has been at all-time highs for a while, and we've been waiting for transports to either catch up or the Dow to pull back, and really the Dow pullback has not happened. So transports needs to continue up here, should hit that 71.13 level eventually. Moving over to wood and gold, both of these had strong weeks, 2.95%. We talked about the breakout here 2 weeks ago, strong up move last week, and then this week, very powerful move, continues to break. We're back to this consolidation all the way back from February of 21 up until the big breakdown in June of 22, so we're back into that range. And this massive move here was really driven by the end of COVID and the massive demand for homes. And that lasted a very long time. February of 21, like I said, here to June of 22. And then we pulled back pretty decent. And now we're getting right back into that area here where demand for wood is up once again. Homes Home demand is up, and it definitely points to a little bit of a stronger economy here as this wood indicator continues to go higher. And then gold, again, driving higher on the week, 1.16%, still headed towards the price target of 250. It's been a good trade, momentum bullish, RSI bullish. I think we're going to get there in the next week or two, and then that's probably going to be it, at least for the short term. It's been a very strong move here for gold. You can see we bottomed out at 150, and now we're going to 250. So that kind of a move for gold, about 60 to almost 65% there. So big move, definitely extended. I think it has just a little bit more in it, looking for that price target. Moving over to RIOT and Marathon, both of these had pretty good weeks, 9 and 11.26% respectively. Momentum swinging to bullish, RSIs swinging towards bullish right at the SMA on both of these, momentum swinging up. We had a big breakdown, we had a bit of a consolidation. RIOT still doesn't look super great retesting this downtrend line, but if you look at Marathon here, this looks like a little bit of a consolidation, pushing up to the resistance. If it gets above 1878, I think there's a lot of potential here. So you have the trend line at 21.22 or so right in here. If that breaks, we could see a swing back to these previous highs, somewhere between 25 and 26, and then my level up there around 33. So Marathon, it's kind of been in this slow downtrend. Maybe it's kind of a maybe it's a bit of a bull flag type setup, but it's held up pretty well. The low before this was around 17.6. The low here is 13.7. So higher low versus this previous low. I would have liked to see it hold the trend line here, but it didn't. Either way though, still seems like this has some legs in it, and if it can get above that 1878 level, critical zone here, all these EMAs and SMAs clustered. If it pushes up, 33 could be on the table. Moving over to Breadth, 20-day Breadth, Doji, still positive 4% after the gap up, but Doji, momentum bearish, momentum bullish, RSI right at the SMA. Definitely in this zone. We've seen it pause here before like this. Strong move, Doji, strong move down. If that happens here, could see a pretty dramatic down move next week, which kind of fits with the overall thesis. Nothing has happened quite yet, but it seems like the stage is set for that kind of a down move, especially with unemployment data coming out next week on the 20-day, and then looking at 50-day. Not as bullish, not as bearish here. Strong week, almost 7%, 83.83 tested, right back here to the highs from March of 25 and 1 April weeks. So we're right here. Definitely a little bit extended to the upside. We'll see if it can get above this. Once you get above that, there's not a whole lot of room to that 92.25 level. Very, very critical. Once you get there, it can take a few weeks, but eventually you pull back. Either way you slice it. So you got here 1 week, pull back. Got here 2 weeks, pull back, 1 week, pull back. This one was a couple weeks here, so about 4 weeks before we saw the big breakdown. But 1 to 4 weeks, that's really all you're looking at, and it's certainly possible that it just turns right here. So many things to consider. Couple of weeks at best of potential upside, and then we're going to see some pretty dramatic down moves. And some of these are super powerful. You can see this one here, pulling back from 89.23 all the way down here to the 10s. So don't get complacent. We're definitely a little bit extended to the upside, but we haven't seen those bigger breakdowns start just yet. And then looking at 200-day Breadth, this continues to do quite well. Positive week, 6.63%, momentum bullish, RSI bullish. We're above all these levels. For me, 76.04. We're right at this kind of consolidation high around the 80.2 area. So did throw a wick through that, almost touched this previous high from April. The RSI looks okay. Seems like it's actually regaining a little bit of momentum there. So something to consider on that. Your next level here is 93.42, and that is just about as high as it gets. You can see you overthrow it just a little bit here every once in a while, up into the 93, 94s. Here you got to like 97 back in April of 21, and then we eventually sold off. So still some room to the upside on 200-day Breadth. It's been a long consolidation. We got into this range back on 11 December, still grinding in this same zone here. Now we got a little bit of an up move there. So maybe a little bit more bullishness to come. Definitely some mixed signals on that. You could argue this is a consolidation high, maybe rejection from here, but if it breaks out, that's obviously going to be something to watch for. And I'll put this back into the daily videos if we do see a major change. Moving over to the dollar here on the weekly, another down week. So we've had a lot of down weeks in a row going back to 1 July. We had one up week here, 15 July, another one here, 26 August. But besides those, it has been straight down for the dollar. We did close below the 200 at 100.51. Price right now, 100.41. And then you got trend support down here, 100, basically 100 flat, 100.01. Momentum starting to swing here. If this breaks down, maybe we have a little bit more room. Downside trend around 97, downside level here. Let's go ahead and add that. Right here at the low from this 10 July candle. On the close is 99.91, and then below that, it's really a massive uptrend into the zone, so not a ton to deal with there. Once it breaks down below here, like I said, I think you could see a bit of a flush out on the dollar, maybe taking us down into the 2.8 area, something to watch for there. Especially with the most recent rate cuts, the dollar is definitely continuing to weaken. The other thing that's worth mentioning here is the RSI divergence. So the low for RSI was 28.27 back here on 19 August. We currently have lower prices with an RSI of 31.29, so you're getting a little bit of a falling wedge type pattern, which is eventually a bullish pattern. Key supports here, maybe we wick these critical levels and then we start to see that bounce. It is very extended even for the weekly chart. Occasionally you see these kind of moves like here, July up until around October. Very powerful move here, and it's been a strong downtrend, similar to the one that we saw here actually from October of 20 all the way to January of 23. So big down move, ended up into a wedging pattern. Clear divergence, got a bit of a spike, ended up going lower, but something to consider. Could see a bit of a spike here, which would give equity some room to the downside. Moving over to JNK and TLT on the weekly charts. JNK looking to hit that 200 SMA at 98.32. That is your next level. We did close above 97.69 for the week. Momentum bullish, RSI still bullish. Could see a final gasp push up to that 200 and then get the rejection from there. We're so close, you would almost expect it at this point. About 50 cents higher to that level. And then similarly here for the TLT, we had the pullback, hit the trends, found some support. Momentum still fading. Still want to see it hold this level and push to that 144 EMA. Next level for me, if it did get back above 100, would be 102.50, and then 103.7, and then the 144 EMA there at 104.4. But right now we're at support, waiting to see if we can get that continuation on this bullish trend structure. Moving over to the VIX, look at that big wick low, hit the 21 week, hit the 55 week moving averages, EMAs I mean, but then we got the pop, 4.89% to the upside. That is a higher low here on the weekly, RSI below the SMA but trending higher. We get another spike here, 200, 144 sitting around that 19.37 area. If that area breaks, then we're looking for that 22.5 up in these trend zones here, so something to consider. We're right at this one, short-term trend here, held this level. Realistically, this probably should be more like this. So if you adjusted it to that, marks the low here, and here, which would say that this is still above that trend. So grinding higher, again, could give you that little bit of a bearish thesis based on volatility starting to spike into this unemployment week. Moving over to my accounts, I made about 0.8%, which isn't bad. The NASDAQ was up about the same, maybe a smidgen more than what I ended up making, but about $1,000 on the week, which you can't complain. That's a good week. I would like to make $1,000 every single week. In terms of positions, IWM 4220 for $2 credit. There's about $2.40 left on that. I still think the Russell's going to be in good shape. I can roll this down if I need to, if we start to see some breakdowns. And then looking at the Qs, if the Qs breaks down, which I think is a little bit more concerning, I'm already here at 486, a smidgen in the money. We did close below that just barely, but we'll see how it plays. $2.33 credit, small profit on that already. I think we're going to be okay there. Still looking to collect that money on the day. I'll be watching this one closely as I do think the risk is to the downside, and it could be substantial, a couple of percentage points on the week. So I'll be watching and playing a little bit of defense this week if we start to see some of those key levels break. Let me know down in the comment section what you think of the top 10 tech titans. Are they going to be able to lead markets forever, or will we see emerging companies take them out? It seems inevitable that they will start to fail, but the question is when and by who, and how much more gains can they make before that starts to happen. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.